It's time for stock picks. Today we are zooming in on the smaller players on the JSE, looking for value in the small caps space. And up for analysis are CMH, Weaver Fintech and Ioco. Joining us to take us through those counters is Marc Hasenfuss from Financial Mail. Marc, thanks so much for your time this afternoon. Let's kick things off with CMH. The last earnings, not that great, HEPS down over 20%, but that might change, right? As we've seen an overall recovery in vehicle sales.
Yeah, look, Combined Multi Holdings or CMH has been around a long time. Sure, there have been too many other dips where the brakes are put on sales. But it's a good business, a very good business, trading at I think it's about a 7-8 PE for a business that's been around since the late 80s and had a consistent record of managing the business well through thick and thin. So the reason I like it is not really only just recovery. Yes, it was probably, I kind of wish the share dipped a bit more after those results because they weren't great, and you don't often see a 30% decline with them, or just quite a significant decline. But compared to something like We Buy Cars, where they're trading on a 25 PE, yes, they've got a cutting edge in technology, etc. They're in the used car market. It's very competitive in the new car market with the Chinese imports coming in. But I kind of back CMH to get through this, to perform. I think I know that the founder, well, not the founder, the long-standing CEO, looks like he's about a step away. He's kind of close to 80, so he's been around a long time and a really good operator, I must say. I've got people in the motor industry who know him and say, a really good guy. So I mean, compared to something like We Buy Cars, I can't get my head around those growth stocks that trade at those PEs. Other people do. I'm always a little bit too conservative. So CMH is my backing. With a car rental business, little add-on that's also not done that well recently.
Yes.
But if I walk around Cape Town, I live in Kommetjie, there's the tourists are still coming. They've come through into the winter months. Kind of hopeful that'll pick up as well.
And that was going to be my next question around that car rental business and just the prospects of the vehicle hiring market, considering the price wars in that part of the vehicle market.
Yeah, look, I mean, I suppose you see this in the share price of Zeda as well. There are obviously concerns that's trading, I think, at much lower PE than CMH. That's also an interesting company for another time, maybe. But look, I think they've run first car rental very well. After COVID, they reacted better than the others, so they got a bit of a head start there. Things have caught up with them now. It's got competitive, but you read the annual report. They're making plans. They're buying smaller cars that are easy to sell later. They're adaptable. They're flexible, and I think it's always a nice. It's kind of something that offsets the main car business, and it'll have its ups and downs. But I think it's a very well-run operation.
Let's move over to your second pick then, formerly known as Home Choice Weaver Fintech. It is a totally different business from what it was, about a decade ago, from being just, a furniture type of retailer to focusing on fintech with products like Pay Just Now. Just walk me through your analysis of that counter.
Yeah, look, you say it's now called Weaver Fintech. That name change, in my opinion, is about 10 years overdue, but was FinChoice has been driving them for a long time, quite a few years. Okay, look, let's step back a little bit here. This business comes with, I don't want to say a checkered history, but obviously some controversy when it was first listed back in, I think it was just 2001, somewhere around there, and then it delisted in very controversial circumstances. Now, the market really, especially institutions, take a long time to forgive. And I think what happened there, I don't want to go into all the dirty detail, but it wasn't a great event that happened. I think some of the main shareholders voted when they shouldn't have been allowed to vote. In fact, you couldn't do it these days, but in those days you could. So it was very controversial. So the cloud has always hung over the company from the past. If you look at the company now, it's a fantastic, it really is a well-run company. To be trading at the multiple it's trading at, it's less than what you get for a normal retailer. This is not a retailer anymore. It's a fintech company. You're getting this crazy rating. I think the market just hasn't worked out just how much they're generating from this fintech business, and it's a very exciting business. The FM had a cover story on it recently. I thought it might heighten some interest in it, but the market just seems it's very liquid. So I guess institutions will look at it and say, it's interesting, but I can't get a line of stock, so no one's going to drive the price. Maybe the name change indicates that they're going to seek, maybe they'll raise capital. Now, they tried a couple of years ago, not that they need it, but you can bring more institutional interest there. It could work. The fintech business is quite dynamic, and it's one of the better ones I've seen. And I'm just quite surprised by the rating that's slapped on it. It's very modest.
And it's been interesting to see, Mark, some of these non-banking players dip their fingers into the fintech space. We've seen it with the telcos players. We've seen it with some retailers. I think of the likes of Pepco as well. Is this a trend we're likely going to see continue to grow?
Yeah, I think it will. I mean, I don't want to, kind of blow our secrets at the FM, but we've got a story coming up on the buy now, pay later sector.
Yes.
It's really growing very fast, and that's another application that Weaver have got. So yes, there's a tie-in with the retailers as well. This is from their old legacy business, so they understand that markets, and I'd be surprised if others don't do it. I mean, these guys have got obviously slotted a march on everyone, I think, but we could even see foreign competitors coming, I guess. So it could be quite interesting in the future.
All right, let's move over to your last pick then, formerly known as EOH. That group, Ioco, that has made quite the turnaround. Mark ridding itself of the reputational damage as well. But Stephen van Coller and the team putting in the work and, setting the business up for growth. Take me through why that is one of your picks this afternoon.
Okay, you mentioned turnaround. Yes, I'd say there's been a turnaround. Let me phrase it like this: maybe a moral turnaround under Stephen van Coller. He had to clean up the business. I think the main turnaround still has to happen. That's the proper operational turnaround. As you know, it's operating in a space that's very competitive. They've lost the Microsoft license. They've got all kinds of headwinds. They don't operate at a great margin. So it's tough out there. What I do like about the business is the new prime movers there. We've got joint CEOs, which is quite interesting. Dennis Venter being one. And then you've got Rhys Summerton. A lot of the older readers remember him from penny stocks way back, but Rhys has got more prominent with Argent, doing a fantastic turnaround story there once he got involved. And I think he's doing the strategic stuff here. Very interested to see what they do in terms of building the margin. I think in his latest newsletter to his shareholders at Milkwood Capital in the UK, he's making a point about saying you cannot run Ioco without a margin. It's no good. You've got to do it. So it'll be interesting to see how it changes the business, because that's what they did at Argent. They really were meticulous about cutting away things that weren't making sense, getting rid of non-core assets, building a very good business in the UK. I'm not saying they're going to build an international arm here. There is international stuff, but I'd just be interested to see what he does. I think it's at an interesting juncture. The easy money's been made. Let's make no about that. People who follow their rights, etc. You made some good money. A very interesting juncture for this business, and I think watch these guys going forward. It could be interesting.
And you mentioned that space is quite competitive. How does Ioco then stack up against its competitors as you are, betting on this, I guess, an operational turnaround story at the moment?
Yeah, well, that's going to be the trick. So I would say I wouldn't be surprised if there might be a strategic acquisition or two. I know that sounds crazy now, that's how they got into trouble in the first place. But the Microsoft license, let's say, maybe that's one way of getting it back. I don't know. But I think they've mentioned things like share buybacks. I'd be surprised if they don't look to build the business out so they can bolster that margin a little bit quicker. I think ratcheting up the margin slowly might not work that quickly. I know they're going to do it anyway, but it's difficult. As you say, it's very competitive. They're a commoditized service. I'd say watch these guys. Strategically, things could change a little bit. And I think Dennis Venter is a good guy operationally. I think he will be running a very lean and mean business. So it's not like they've got any frills left. I think they've cut things away. I saw mentioned in the newsletter they found that they'd hired a cameraman for 1.3 million a year. So I suppose they've cut to the bone, and it'll be interesting to see going forward in the next few years.
All right, Mark, thanks so much for your time and taking us through those counters. That was Marc Hasenfuss from Financial Mail.